Hi, I'm Tanya Escabel, Southeast Regional Manager with Cross Country Mortgage, known in Nashville as your closing queen. Today I want to talk about interest rates in particular and just give you Tanya's 2 cents when it comes to the interest rate and the trends that we're seeing right now in the market. So the good news is we have been seeing in the last 3 weeks a trend of rates coming down a little bit. So about 60 days ago, we were hitting around the 3 1/4 range, 3 3/8. Now we're back down around 2 7/8, 3.99% on a 30-year fixed. And again, please keep in mind when you're talking about interest rates, every consumer has a different financial DNA, and there is about 12 different factors that determine interest rates. So when we're quoting interest rates, typically as lenders, that is a par rate, which isn't costing anything. And then also, in most cases, when you see quotes, it's with someone that has a credit score that is in the top tier, which is anything above 740 as far as their middle score. So that is where if someone has really great credit right now, is putting 3 to 5% down on a conventional loan, or even an FHA loan, you're going to be sitting in those upper 2s, maybe the low 3s, just depending on the loan program. So that is great news for your buyers when it comes to their purchasing power. And think about this. We've talked about looking at third and fourth quarter with a lot of different projection analysis throughout the United States. And basically, a lot of those projections, because of the inflation concerns, says we probably are going into third and fourth quarter going to see a rise in rates. So you've got this window of opportunity right now with clients, since we've seen a little bit of a dip of rates coming down before we hit those projections that they're going to start to rise. So we have a wonderful report for your buyers. It actually is called the cost of waiting. It takes me literally less than a minute to get that to you and to equip your buyers with numbers, charts, everything to show not just the monthly payment difference when it comes to rates rising, but the interest difference as well. How much more of their hard-earned money is going to principal versus interest with these low rates. So a lot of times clients just think about the monthly payment difference. This report will show them not only the interest rate difference and the interest difference along with the monthly payment, but another thing that this report shows, which you will really appreciate, is appreciation. The cost of waiting, maybe that home today is $400,000, but in 6 months, is that home going to be $425,000? So it's a great report and a great tool for you to help your clients see that there really is a true cost to waiting. For example, if you're getting a $300,000 loan amount, this is just talking about interest rate, you're looking at a 2.99% rate now if they qualify for that. And if rates go up a whole percent, 3.99, which is still an overall great rate, but what if they did go up a full percent because that consumer decided to wait? What does that mean to their payment? That's actually $168 more a month, just in a 1% increase in rate on a $300,000 loan amount with principal and interest. So there is definitely a cost to waiting. We've got some great tools to help your client be able to identify that and actually see the numbers and really understand now is the time to buy. So if you would like to get some help or get a copy of our purchasing power, the cost of waiting report, please give me a call at 615-300-0794, 300-0794. Or go to my website at tanyaescabel.com and be sure and tune in to the original real estate show on Super Talk 99.7 WTN every Saturday from noon to 1. The Closing Queen is here to help you get your loans closed on time, quick, every time.